Ready to start your ESG journey? Get going today with Social Suite, and you could start reporting publicly in 30 days. With investor pressure mounting and regulations just around the corner, there's never been a better time to start your ESG reporting. Social Suite takes the complexity out of environmental, social, and governance reporting. Social Suite helps organizations to measure, monitor, and report on their progress with fast, simple, and affordable software. Create value through ESG in order to raise capital, improve brand and reputation, as well as mitigate risk. Social Suite has helped almost 100 micro to small cap companies report on ESG, with some starting their baseline report in under 60 minutes and reporting publicly within 30 days. ESG is a lot easier than you think, and you're probably already doing it. So take your sustainability reporting to the next level with measurable progress. Start your ESG journey today with Social Suite, an ESG software company for micro to small caps. Visit socialsuitehq.com. That's social, SUITEHQ.com to learn more. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Ryan Goepel, CFO of Crossing Airlines Group, Inc. It's a publicly traded company. I got two symbols for you: JET on the NEO and JETMF on the OTCQB. Crossing Airlines Group, also known as GlobalX, is a US 121 domestic flag and supplemental airline flying the Airbus A320 family aircraft. GlobalX flies as a passenger ACMI and charter airline serving the US, Caribbean, European, and Latin American markets. In 2023, GlobalX entered ACMI cargo market flying the A321 freighter. I found Crossing Airlines Group on several forums that I subscribe to, notably on MicroCap Club. And you might be asking yourself, oh boy, an airline, here we go. However, since starting the company in January 2020, which we talk about at length, actually, Crossing Airlines has grown significantly, and I wanted to better understand how and why this occurred, plus Crossing's growth goals and how they hope to achieve them, the original thesis for the company's founding, addressing downside risks and adding more planes to the fleet, and how folks understand the company. With that, please enjoy my conversation with Ryan Goepel, CFO of Crossing Airlines Group. Ryan, thank you for joining me today. How are you doing?
Great. Thank you very much for having me.
It's great to have you on. So this is our first time ever doing an interview together. You know, I found out about Crossing Airlines Group through a couple different sources, MicroCap Club in particular. And so wanted to invite you on and just better understand the company. I understand that it's only about 2 years old. And so not a long history, but a lot's been happening. So,
yeah, quite a bit.
So let's dig right in. You know, I ask every company on here, this is their first question. So what would, if you had to describe Crossing Airlines Group in one sentence, what would that be?
Crossing Airlines Group as an entity fills the need for air travel that existing carriers cannot. And so we do that through what we call ACMI charter and supplemental lift.
Very good. Okay, so as I alluded to or said at the top, you know, it's not a long history. You know, sure. Company's been around a couple of years. So take us back. You know, when was the company originally, you know, officially founded, and sure, what was that original thesis for its founder?
So we originally founded. We basically launched an airline in January of 2020, which, wow, if the history books as a guide would be, was an interesting time to start an airline. And we did it for a reason of we saw an unmet need for customers' needs were not being met in the U.S. and North American markets. We provide what we call ACMI charter, so that's whole plane charter, but on the big bit with big planes. So A320s, We use the A320 family of aircraft. For those who aren't familiar, it's when you get on a plane, there's three seats on either side, single aisle. That's us, right? So our CEO, who's been doing this for 45 years, most recently had launched Eastern 2, had great relationships with customers who kept saying, hey, we wish there was another player in this field. We think there's room for someone with an Airbus product. We think there's room for someone who can provide differentiated customer service. And with that in mind is what he launched. He went to go launch the airline. So we initially kind of got our start by signing a merger agreement with Canada Jetlines. So Canada Jetlines had attempted to launch a ULCC carrier, which is an ultra low cost carrier in Canada. It did not succeed. They kind of ran out of money before they got started. Ed negotiated a kind of a reverse takeover. So we merged with them, took 60% of the shares, changed the name to Global Crossing. And that really kind of launched us in June of 2020. So we imagine when we were doing that raise was during the initial lockdown. So it was when Zoom was kind of a new thing. Conferences by Zoom was a new thing. But that was how we did it. We got launched, we got traded, and we instantly went into what we call our certification process. So in order to operate these type of aircraft in the United States, it's highly regulated. It's very difficult to get. It's called a 121 certification. There's only about 10 there's not a lot of operators who have it. The ones you know of are all scheduled carriers like JetBlue, Delta, United, American. Those are all what we call 121 carriers. And because we're flying such big equipment and we're flying so many people per flight, we are subject to the exact same regulatory standards as those airlines. So we embarked on getting that certified. Normally, that's a 3 to 5 year process. Again, we did it by Zoom in little under a year. So by August 7th of the following year, we were officially approved by the Department of Transportation and the FAA to start flying flights for revenue. So that's where we really started. We started with one aircraft on day one. Our first flights were domestic flights for like sports teams, was kind of our initial ones. An interesting part of our history is about a week after we got certified, there was as you knew, there was that issue in Afghanistan with the evacuation. We were called by the US government to see if we could help. Funny how a lot of your approvals get greenlit pretty fast when you're willing to send aircraft, but we ended up sending 2 aircraft to Kabul to do evacuations for citizens out of Afghanistan during the uplift. And we were the only US carrier to do it. We're the only 121 carrier to do it. And we're pretty proud of that. Was like our first week of operation. So that's how we started. And then, so since then, we've started with our passenger business. And our business model is actually quite simple, our growth is driven by adding aircraft. If you add aircraft, you add capacity. If you add capacity, you add revenue. If you add revenue, eventually you get to scale, and then you get to profit. So fast forward to today, we have 8 passenger aircraft. We have since launched our freight operations, which we can talk about as well. We did about $100 million in revenue in our first full year of 2022. And I think we projected last earnings call about $140 million for this year.
Very good. Thank you for that full update and overview. And there's a lot of different things to go down. But let's start on you say that you have 8 aircraft currently. I on one of the threads I was reading, and getting prepared for today, and maybe you can clear this up. Does the company own the aircraft, or you rent it? You rent it and then you rent it out? Is that how does that work?
Ideally, as a mature airline, we would probably own half and lease half. But we took, never waste a crisis, as they say. We took advantage of COVID and were able to structure some really advantageous leases at probably half the price we would have paid pre-COVID on our initial aircraft, on our initial 8 aircraft. All of them are on, what I'd say, fantastic deals. We target a type of aircraft, midlife, they're called midlife, 12 to 20-year aircraft. And they were significantly impaired as a result of COVID, and we took advantage of it. So the other thing we talk about, and we're proud of, if you think about, normally it costs between $30 and $50 million to get an airline certified. Just certified, that gets you to August 7th, right? We did that for less than $8 million. Not only and to get to profitability, it usually costs $100 to $200 million in capital. We managed to get to break even in profitable in Q3, slightly negative in Q4, and profitable going forward with less than $30 million. raised to date. So we have been very efficient with capital raised. That's also by design, and necessity is the mother of invention. But we're pretty proud of our discipline in that area. So when you start thinking about an entity and its return on capital, which is a metric people don't talk about much anymore, but when you look at our return on capital employed, it's significant. And we're proud of that fact. And that's kind of the nature of the way we're structured. Now, going forward, there are some reasons it makes sense to own aircraft. But we're not really in a position to buy aircraft, but we think that makes sense as a longer term vision.
Absolutely. I mean, you spoke a little bit about to what I think some of us would agree is a bit of a moat to get started with a similar business model with what you guys have. But maybe you can dig into that a little bit more of like, okay, we went down this path. Yeah, I recognize there could be a risk somebody else maybe could come in, but it still takes time to get fully regulated, all the licenses, everything like that. So maybe you can give us a little more color on that, because I think people want to better understand, what the moat currently is, and then how you get to that profitability going forward.
Yeah, I think the way the moat is, there's a couple, right? The first moat is the 121 certification. The FAA has made it pretty clear they're very resource constrained. There is not going to be another 121 for a while. The last significant 121 carrier certified was when Ed did it with Eastern in 2015. The last flag carrier, which is what we are, and that's a kind of a different level of certification, was JetBlue in 2001. So many people attempt to certify, very few are successful. And the process, if someone was to start today, that process is 3 to 5 years. So that's just that, which is a pretty significant moat. And we're pretty, there's a limited supply of those certificates, and once you have them, they're valuable. I think the second barrier is we're now delivering fantastic service to an underserved community that's now being served, right? So you'd have to be differentiated from us. And we've actually, some of the investors we've had who have gone in on some of the private placements were looking to start 121s, and then they met our team and were like, we'll just join you. We're not going to try and beat you, because it's a hard enough game to get to this stage. Very few people get to this stage despite best efforts. And we're pretty excited about what this platform we've created means, because it's really hard to create this platform.
100%. There's no questioning that. That's for sure. I mean, especially starting an airline business in January 2020. No one's questioning your gumption by any means.
I remember I was with a bunch of buddies. We're doing those those Zoom calls with all people you haven't talked to in 20 years that everyone did when we first went into lockdown. And I remember I was doing with some of the guys from university, and one of them just said, "Slow clap for the optimism." And I never forgot that line. And I was like, "Yeah, we're doing this." He's like, "You're starting an airline." Sure you are. Okay, so and we've actually started too, because we ended up spinning off Canada Jet Lines, raised them some money, and now they're in operations too, which is we're really proud of as well.
Gotcha. So you mentioned, some of the customer base. You mentioned how obviously basically your first week in business, you sent 2 planes to Afghanistan to help with the evacuation there. And then fast forward, I think it was maybe a week or two ago, I saw a press release, or maybe it was a press release or a post or maybe it was last week actually, where the company, you had the plane to send the U.S. men's soccer team for the game against Grenada. So clearly it's. I think for me, when I was doing my background due diligence, like that was one problem I was trying to better understand, was like, who is the customer they're really serving? Is like, it kind of runs the gambit. So can you give us a little more info there?
Yeah. So, when we think about our customer base, it's varied, right? So one of the advantages we have, and if you want to think about us, and if you want to, I always try and equate our business to other businesses maybe I've been in or other people would understand. If you think of a scheduled airline as a fixed price business, so once they set their schedule, 97% of their costs are fixed, right? They have to now manage that fixed cost, sell enough, manage their cost, manage. We're a cost plus model, right? So inherently we're much lower risk, right? Which is why we require less capital. But as a cost plus model, we basically can point the metal, the aircraft, to where the customers are and provide it in a manner that they want. So it's kind of like, I worked at Burger King and said, have it your way. Well, that's kind of how we are, but with big plans. So who wants that? Who's looking for that kind of thing? A big consumer group is the college sports teams. For NCAA, we've done over 70 flights for the NCAA as part of the March Madness for both men and women's groups. That's a big client of ours. You look at tour operators, we are pretty much the dominant operator from Southern Florida to Cuba right now as a charter. There's a big charter market for it. We are the dominant player in that. There's a big charter market for tour operators going from South Florida to Dominican Republic. And we are the dominant charter in that. So we basically own those two spaces, which is great. Other groups that would hire us, the U.S. government, whether it's for ICE or CBP or moving people around, the U.S. government is a big player in this space. Another big player is music acts. So in the summer, we did a lot of tours, Bad Bunny, Lady Gaga, Coldplay. And it sounds cool. Like, you're not flying. Sometimes you're flying the talent. Like we are flying, it's a couple people right now. A lot of the times it's the crew, right? It's the stagehands, it's the dancers, it's the background. And so that's another targeted group that we do customers for. We're looking at flying for, and we have another group that we have started to develop is other airlines. And so where that is critical is we really see there's a lack of capacity in the market for probably the next 2 to 3 years due to delays and deliveries. And you don't hear airlines scaling back their schedules. And so you're going to have a problem where they've grown their schedule, but they haven't grown their capacity. So when you go back to what I say we do as a core business, as we provide capacity or we meet needs that are not being met by the existing operators. And so we are seeing this summer, we'll be doing a lot of flying for existing airlines. And so, when you get on an aircraft, you buy a ticket on one airline and then you kind of get to the gate and you're like, well, that looks different on the inside. Well, that could be us. And so we see a really big opportunity for that for now and in the future, as we have shortages of pilots, shortages of equipment. We are the person you can call on demand. We're on demand supply. Whereas a scheduled carrier can sometimes take months to ramp up and get everything put in place.
For sure. All right. And forgive me for my noobishness with this next question. So bear with me on this. Because you say, so back up, we have 8 planes in the fleet, right?
Yep.
So, we just answered my question very well about, the customer base and all the things that you're doing. It seems like a lot with 8 planes, right? So am I missing something? Is my brain, listen, I know I have an IQ of 84, so I'm still trying to figure it out. But like, help me. How does that work? And saying on demand, like, obviously it seems like you need to get more planes.
Yeah. So, we would not, you don't build something like this to have an 8 airplane fleet. You just don't.
Yeah. It makes no sense.
It makes no sense. So, that's why we talk about when we talk about growth, we've created a platform that's scalable to hundreds of aircraft. And that's the plan, right? Is so the plan is now there's regulatory issues, there's safety issues in the sense of you want to make sure you are doing it in a safe and efficient manner. So that's the most important thing we could possibly be doing. And so you can't just add 8 aircraft. It's kind of like you have to hire crews and people and infrastructure. So there's kind of a cadence to you adding them. So we've gotten to 8 pretty quickly. We said our target plan is to add 1 more passenger in April with potentially another 4 or 5 in 23. The reason we say potentially is sometimes it's outside of our control, right? So these planes could be in maintenance. These planes could be needing repairs. These planes could not, the lessors could be late in delivering them. So sometimes we endeavor to have them delivered, but until they're, my mindset is, here's what we know is coming, firm delivery dates. We're negotiating everything else. And, that could be in 1 month, 2 months, or 6 months.
Got it. Yeah. So then you say that it's a platform for, other carriers out there. Can you explain how that works?
So it's a platform for us, right? So the platform is for us to add aircraft. And so by us adding aircraft, we can go address different customers through our platform, right? So one of the greatest opportunities COVID created was you had this amazing asset in A320 or 7 Boeings as well that were, they were $40 million before. They're like 15 million, or they were 30 and now they're 10. So you can make money on that 2 ways. One, you can buy one for 10, like a house, and hope you can rent it out again and make the money. Or you can get a certificate and go fly the plane, and go make money that way, right? So I think from our perspective, the platform allows us to monetize what was a highly depreciated asset from COVID that has not yet recovered. And the reason it hasn't recovered is because you need a platform like us to monetize it. And there's not a lot of those platforms out there.
So that was going to be my next question, is the kind of the COVID tailwind, basically, that kind of, from what you're telling me, it sounds like it's really pushed you guys a lot more forward. I mean, do you still, because without question, you can ask anybody listening to this who's traveled in the last, year, 2 years, it's a nightmare. and everything is just way more expensive. And so, and you kind of mostly alluded to this, but how does, the company really solve this issue? And also, how do you find these planes that are now kind of just potentially available at these depreciated costs?
Yeah. So finding the planes is, we have a group that basically works. So there's lessors. There's a significant lessor community. There's a significant airline community. And there's a whole ecosystem about, think of it as a massive used car lot in the sky. Actively marketing, promoting, and trying to sell these aircraft. So that is just an expertise we developed in-house that we work through, and that's kind of how we manage it. The trick is finding you need three things to make it work. You need a plane, you need pilots, and you need customers, right? And so we've also gotten very good at recruiting pilots. We have a great pilot corps. We're up to almost 100 pilots now, up from 27 in December last year. And that too is a massive asset, because it does you no good to have the medal if you can't fly it. And so when you combine those two things, and then you're available, right? It's 100. A lot of the times, you winning the work is, do you have an aircraft? We need to get from here to here, and we can do it. And so I think that's one of the reasons it's been pretty, a great couple years for sure, and we're really excited about the future.
For sure. So let's look at the competitive landscape. I mean, obviously there's just the whole airline industry in general, but I mean, are there other companies that are starting to deploy similar business models, or
actually they're exiting, right? So historically you saw airlines like Sun Country, Allegiant, JetBlue, Delta would have some of their business in charter operations, what we're doing. But they can better utilize their assets because they have the infrastructure in scheduled service. So they've actually been exiting the market. We have one big competitor called Aero. They're private. They have a relatively older fleet, so we feel really comfortable competing head to head with them because we have much younger aircraft, which makes a difference on reliability, fuel consumption, and all the other ways you can differentiate yourself. So again, we saw it as a grossly underserved, right? So underserved market, and that's kind of where we're at.
Got it. So you've kind of started doing the, even though you've just went public, you relatively recently, it's been about a couple of years and change here. You've done a few investor calls, I'm sure, and conference, the whole bit. So what would you say, even after, they've had a chance to talk with you and the team, had a chance maybe to interview Ed as well, what are investors still potentially confused about? Maybe we can answer some of those frequently asked questions here.
Yeah, no, I think some people don't understand so we don't have, one of the things to look at is, if you have a long-term contract, everyone wants to see a long-term contract. But that's not the nature of the business. When you go to fly, do you buy all your plane tickets for the next 3 years? Right. So it's no real different than us. For a sports team, they don't know what day their games are going to be or what their schedule is. But when they do, then they go contract it out. Right. And so when we did our earnings call, we talked about, 140 million projected, 81.5 contracted, because we've gotten better at locking stuff in further in advance because people know us and we got a huge repeat customer base. I think, there is, from that perspective, that's an issue. Some people kind of are like, well, we don't really, if the math is what the math is, we don't understand why you're at this share size, this share price. My first reaction is me neither. But I think the answer is microcaps, as I'm sure everyone on this group knows, aren't necessarily properly valued based on who they are. Sometimes it's a function of who's buying, who's selling, can they get the investor's attention? Can you get the right people to support it? We've had people who've been in with us for 1, 2, 3 years. If some of them are selling and I haven't matched the buyers, it'll hit the share price, but it really has nothing to do with the underlying business, which is still incredibly strong. And so I think there's that aspect. People are concerned about cash, always cash. Me too. That's kind of how we manage this. And one of the things we benefit from, though, is we never fly a flight that loses money, right? So everything's cost plus. Everything's paid in advance. Everything's cost plus. So we don't have that accelerated burn that an airline can have when they're flying a whole bunch of empty flights, which is where they get smoked, right? Like, we can, if in the worst case scenario, we could, scale back the flying, furlough people, reduce costs, but we don't have to, set money on fire by flying an empty plane. And that's where the losses can be fast and furious, as they say. We just don't have that. We don't have that model.
Absolutely. I mean, we talked a little bit about my next question here, but I asked this to every company as well. In your opinion, what would you say are some of the company's downside risks that maybe we haven't addressed yet?
Downside risk? Yeah, I think for us, if we don't grow, you have to always be growing in this business. If you see us be stagnant or not adding aircraft or not growing, that's not great. Because your cost will naturally grow as people get more experience. There's natural increases in pay rates and other aspects to the infrastructure. So you need to be continually growing. And I think that's what we're really focused on doing. One of the things we projected this year was, okay, if we don't add any more aircraft other than ones we've contracted and paid for, which is the 9 and 2, we're going to still increase revenue by, almost 70%, right? That's pretty good, right? But that's our base case. That's like, if I don't add anything, we still can grow on top of that, and we can still grow in subsequent years. And so, we're trading at 0.6 times revenue, which is, interesting from us. But, I think that's the downside risk is, can we keep growing? People worried about, okay, what if there's a recession? Well, one of the things when you look at our customer base, no one's recession proof, but they're recession resistant, right? So the sports teams, they're going to their games, right? Whether the economy's in the crapper or blowing out, they're going to their games. The U.S. government's going to be flying their contracts. The Department of Defense is going to be doing their work. And, some of these charter flights that we're doing, they're still going to continue. So we feel we're rather insulated from that kind of negative downturn. And because we're on a cost plus model, we really want people to think about our model differently than another airline, right? So another airline, if they get any one of their pieces wrong, could lose a ton, right? Everything versus cost plus. If I get fuel completely crazily wrong, I have a mechanism to go back to my customer and ask them to pay the difference. And if they don't pay it, we don't fly the flight, right? And we get paid in advance. So if I don't have to worry that I've only sold 50 seats on this 200-seat aircraft, because I sold the whole aircraft and paid for the whole thing, whereas another airline would, I don't have to worry that I'm not selling my seats for enough because I charge them a rate for the whole plane that I want to make. So we've really de-risked a lot of the aviation stuff, which makes this more suitable to a MicroCap world, because it has the big upside with not all this huge, infrastructure risk that a scheduled carrier does. Absolutely.
So one other question, because I know everyone's probably going to want me to ask this on here too, is the path to profitability. For full year 2022, as you've said, the company did about 100 million in revs, with a net loss of about 15.8 million, something like that. So I'd love to hear what the game plan is to get for that path.
So when you think about EBITDA, so there's 3 levels of profitability in airlines. There's EBITDA, and EPS, right? So EPS is earnings per share. EBITDA is, add back interest, depreciation, taxes, and amortization. EBITDA is you take EBITDA and add back rent, right? Because if you owned all your aircraft, it would all flow through EBITDA anyway. But if you lease your aircraft, it flows through rent. So this allows you to compare airlines, right? So we've been EBITDA positive since June, every month. Right, so we hit that hurdle. We were profitable in Q3. We did have a loss in Q4, but that's because we were investing in pilots and training. We launched cargo to go from 7 aircraft to 11 aircraft, by early April. So our losses are a function of investing, right? We can't capitalize pilot training. We can't capitalize, certifications. We can't capitalize any of these costs. We have to expense them. So I would actually see that as a positive element. We project profitability this year, but I'm constantly battling and weighing profitability versus growth, because there is such a huge, we're not doing this to be $100 million company. We're not doing this to get to 150, go, we're good. We're doing this to create a $2 billion company. And so you're not going to do that if you just wait to be profitable, then invest, wait to be profitable, then invest. It'll take me 20 years, right? So we are very focused on growth. And there's a reason. We went from 1 aircraft to 7, like fast, and faster than most people can do. We've launched our cargo operations. We're going to go from 2 to 15. Right now, if you and the guidance we've given, and it's disclosed, is if you take 8 passenger aircraft, breaks you even. The profit from that covers your overhead. Cargo aircraft will generate between 300,000 and 500,000, let's say, EBITDA per month, after you pay for the plane, after you pay for everything. We're gonna have 15 of them, generating 300,000 to 500,000 per month, and our overhead's covered. So that's within 24 months from now. You can do the back of the envelope math, and it's tough to see. It's a classic MicroCap. You take a look at that, and you look at the upside potential, and you look at what it can be. And I would like to think that the kind of people who go into MicroCaps tend to be a little more risky, a little more venture based. They are looking for something like that, and I think we've created this great platform. We just got to get better at telling the story.
Well, you're here. You're talking to me.
There we go. There's a reason I'm here.
I was gonna say there's a semi-decent start. Well, Ryan, I wanted to also ask your background. You're CFO of the company. What attracted you to this opportunity, and also a little background on Ed too. I think that would be good.
Yeah, sure. So I'll start with Ed, because I don't like talking about myself. But so Ed graduated from West Point, served in the U.S. Army. And then got involved in aviation in the original Eastern in the early 80s. His bio is, I'd encourage you to go online to read it. It's long. But he's been in the business for 45 years. He started 4 different airlines. He was one of the people who kind of led Chappaqua Airlines, which turned into United Express, which we've all heard of. He managed Biwi Airlines, which is Caribbean Airlines now. He launched Eastern 2 back in 2015. He's a serial entrepreneur. He's launched numerous leasing companies, different travel companies. The benefit from our perspective as a company of having someone like Ed involved is he literally knows everybody in the business. He's literally seen everything that works and doesn't work, which is equally as important. And he's been really great at kind of driving the business and forcing a pace that we need to be on in order to be successful. My background, I originally grew up in Canada, went to grad school in the US, was in oil and gas initially, working for the Halliburtons and Schlumbergers of the world. And that's kind of where I got my, fixed cost plus kind of mindset, because that's kind of how those businesses are run. I was part of the Burger King IPO in 2006 when they went public the first time, which was a great experience. And then prior to this job, I was working with another airline up in Canada for 2 years. And aviation is kind of like the Hotel California of industries. Once you get in it, you never get out of it. There's certain pace and kind of a coolness to it that, you either really love it or you can't stand it. And I just happen to be one of those people who loved it. And Ed reached out to me. One of his core seed investors had worked with me on prior projects and asked me to help. I'm employee number 2 here. So I've been here since the beginning. Kind of help guide and work with him as we built this thing up.
Very good. All right. Well, a couple more questions for you today. This is one that I also ask everyone on here. In your opinion, and speaking maybe for you and Ed, because I'm sure you guys have locked heads on this one, or trying to be in step with each other on this one, is where do you guys want to see this company in 3 to 5 years, and what would you say are the inflection points that'll get you there?
So 50 aircraft, $2 billion market cap. Is kind of we're lockstep on that. Half cargo, half passenger is really what the driver has been, and I think the inflection points have passed. Just it hasn't been recognized. The inflection point was getting our 121, was getting our passengers certified, was getting our cargo certification, was getting our first cargo plane. Those were the inflection points. Now we have a series of mini inflection points as we take delivery of additional aircraft. And so the real kind of burdens to entry or barriers to entry have been overcome. The certifications have been earned. The customers have been found. And now it's just a case of taking what we've created and adding aircraft to it and growing and continuing to find customers, continuing to find the people to help us execute on the mission. And that's it. It's super simple that way.
Hey, we all like simplicity there. Hey, one quick question on the adding the aircraft part. I mean, how has from maybe the past, I guess let's say delivery dates, have they all been on time from it, or
No.
like what's been going on? I'm sure people are probably hearing that and like, all right, we were just waiting on aircraft, but like, hey, I've been waiting on a delivery from friggin' a crate and barrel for 6 months, like let alone an aircraft,
Yeah, you're not wrong. And so, we've been working closely with, and basically one of the reasons aircraft deliveries are late, and I hate to say supply chain, but it's supply chain, is when we get an aircraft, it goes through what we call heavy maintenance. So they basically tear it apart and rebuild it. And just like renovating an old house, sometimes you find stuff. And, we've had instances where like, all right, we're ready to go. Oh crap, the main landing gear pin broke. 6 weeks, right? And we do nothing. Now, the good news for us is it's not on our dime, right? Like it's not us who's incurring that cost. It's just a lost opportunity cost. So we are very aggressive in getting deals signed. We talk about the LOIs we have in place. We talk about the delivery dates, and we're, we say pushing around here a lot, which I hate, but it's working really, really close with the maintenance organizations to get the plane ready for delivery. And so, but our problem is also our opportunity, right? Because we're experiencing it on a smaller scale. Our customers are experiencing it on a massive scale, and it's significantly hampering their ability to grow, but they're able to sell tickets. So then they call us, right? So, as they say, never waste a crisis, and every crisis creates an opportunity, which is what we're designed to do.
Very good. All right, Ryan. I mean, final question before I let you out of here today. I mean, like I said, you've gotten started doing the dog and pony show and talking with investors, talking with various institutions, all that stuff, working on getting that, continued support. How much, if at all, have your maybe current shareholders, prospective shareholders have influenced any of the management team's decision-making process?
We have a pretty vocal shareholder base. We, just through the nature of how we were formed, we have over 8,000 retail shareholders. Most are not shy about expressing their views. I think if you went on our last earnings call, we had 90 minutes of Q&A. In so much as how does it influence? Ed's got a pretty good vision of what he wants to do and when he wants to do it and how he's going to do it. I think we listen in the sense of ultimately they're the owners too. And so, we like to think Ed and I are aligned because we have a stake in this business. But we're not, what we've heard is there's frustration over delivery delays. Me too. They've liked the transparency. We've tried to be as transparent. If you Google us on YouTube, you probably find about 20 videos, 30 hours of us talking about the business and the opportunity. So we've tried to be transparent. We've tried to bring, help explain when things might not make sense to our investing group. I think the only way we do it is by being transparent and constantly updating them. And so we absolutely listen. Their frustration is our frustration. And, the good news for me is I can do something about it. So it's, that's one of the joys of being in my role.
100%. All right, Ryan, I think we're pretty much there, man.
Okay.
With this, where can our audience go and find more information on Global Crossing Airlines?
Yeah, if you just go to our website, globalcrossingairlines.com, there's an investor relations section. Our latest presentations are there. We are an S1 and effective US filer, so our 10K has been recently filed, so that's there. YouTube videos, if you Google Global Crossing Airlines, you'll see our latest investor. We stream our investor calls, so they're up there. So it's, we're out there, or you can just call me. My number's on the press release. That's actually my number. So just call me. I'll tell you what you need to know.
Good stuff, man. Well, Ryan, thank you so much for joining me here today. Really do appreciate it. Good luck. Stay safe. And I look forward to our next update.
You bet. Thanks. Thanks. Talk soon.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.